Hey everyone, this is Elijah K. Johnson with Liberty and Finance, and we are live with Steve Penny from Silver Chartist, the Silver Chartist Report. Steve, thank you so much for joining us today on this crazy day for the markets.
Yeah, it's a good day to be talking, and thanks for inviting me back on.
Definitely. I'd like to first talk about silver because we're seeing about a 2.5% drop in silver prices right now. What do you think is fundamentally behind the price action we're seeing?
Well, I mean, the fundamentals certainly don't justify price weakness. I mean, we're living in a time where investment demand is growing, industrial demand is growing, and supplies certainly aren't increasing. So I wouldn't credit this drop towards any kind of fundamentals. But when I look at the technicals, I mean, there have been some warning signs, some caution signals, and I'm happy to chat a little bit about those if you like.
Definitely. What have been some of these warning signs that you've been noticing?
Well, one, I look at the commitment of traders report every week, and we weren't at like some kind of crazy extreme where it was flashing crazy warning signals, but we were, the COT is positioned in such a way that the commercial bankers would benefit from sharply lower prices. And looking at prices just hovering right above the 200-day moving average, we know that the institutional trading algorithms just, trade off of that line. It just is. That's probably the biggest input to those algorithms. And those bankers would love to smash price below that 200-day moving average and put those algorithms into sell mode. And, we've seen that in the last couple of sessions here. And unfortunately, I think there might be a little bit more downside in silver here.
I know last time we had you on, you were saying that, silver was really holding on to key support, and that if we saw it break below that, we could see as low as, I think, $22 silver. You were mentioning you didn't think that was going to happen, but like worst case scenario in your mind, where could silver fall?
Yeah, I mean, predictions are always tough, but so I'll just tell you the key support levels. It looks 2375 is the next big support. It seems increasingly likely that we're going to backtest that 2375. Now, it might just be a quick spike down there, but that's the key support level I'm watching. Now, below there is 22. I view that as more of an outside possibility, something that we should kind of be mentally prepared for if it does happen, although I'm not necessarily predicting that. But 22 is major support down there, really 2180 to $22.
And is there any chance in your mind that it would go below that, or is that pretty remote?
I think pretty remote. I'm not going to stick my neck out and say 0% chance, but I see it as very unlikely that we go below $22 in silver. Anything is possible, but I deem that as very unlikely.
Now, as we see across markets right now, we are, and just for our new viewers joining right now, we're reporting on this sell-off we're seeing across markets right now. A lot of, one of the things that people are saying is that it's because of this growing fear that we could see a rebound in the coronavirus, and your perspective on kind of the reason even the stock market is selling off right now.
Mm-hmm. Yeah, you can make that case. I focus more on technicals. I was telling you before the call, I used to read like hours a day. I still read a lot, but I mean, trying to keep up with all of the fundamental drivers can consume your whole day, when I feel like the most price information, the most information density is contained on a price chart. So, we've been talking for about a month now, how the dollar looks like it could really rally here, going back a month or two, and it's done exactly that. And, as your listeners know, whenever there's panic in the market, the initial knee-jerk reaction is to buy the dollar, buy treasuries. And, that's been a little bit of a warning signal for the metals. But, I think there's some reason for hope that we're kind of nearing a bottom here, especially in the mining stocks. I think the mining stocks have probably, they're much more oversold than the metals. I think the mining stocks are probably closer to a bottom than the actual metals themselves.
And you mentioned the dollar. That's a key question. Actually, Alex is wondering in the chat box here is about the dollar. He says the dollar is up, silver down, but the dollar being down makes no sense when silver is down. So your perspective on what the dollar is doing today as we see silver fall.
Yeah, I mean, the dollar's up and silver's down. So that's kind of what you might expect to see. Now, like the dollar and the metals, a lot of people think they have this perfect inverse correlation. Dollar goes up, metals go down. That's not always the case, but there are periods where it is. And when I'm looking at a chart here of the US dollar going back to June, they've traded in almost a perfect inverse correlation for the last couple months here, the dollar and the metals. And I'm happy to share a screenshot of the dollar here, but we're approaching some big resistance levels. When I look at a chart of the dollar, I mean, we're in a downtrend. And unless we get above this next resistance level, the trend is going to remain down. So I think we're closer to a bottom in the metals here than any kind of top, but time will tell over the next week or two.
Definitely. And if we can show some of those charts, maybe starting with the silver chart and kind of share with our viewers. Once again, we're with Steve Penny of Silver Chartist, and we're talking about this recent drop we've seen in silver today.
Absolutely. So I try and keep my charts really simple and just put the lines that I feel like matter to those institutional trading algorithms. So I like to keep them nice and clean. And you see here a 200-day moving average. And then right below that is 25.58 support. That was the low from the last couple of weeks here. Well, you can see today we lost that, and that's happening on big volume. So the path of least resistance here is another further drop down towards 23.75. That's the big support to watch. I like to say we deal in probabilities, not predictions. And I think the probability is that we backtest this 23.75. That doesn't mean that the miners have to crash. Like I said, the miners have already kind of, I feel like most of the damage has already been done in the mining stocks. They're deeply oversold, where when you look at the RSI here for silver, it's not quite at any kind of extreme oversold levels yet.
So moving now to, you mentioned the dollar index. If we could kind of pull that up and kind of share with the viewers why you see that it looks like we could be hitting key resistance levels and it wouldn't go much higher than this.
Yep. Yeah. A couple of things to note on the dollar here. So when you go back to March of last year, we had this big major top here at about 103. And since then, we've had a series of lower highs in the dollar. And the only way that would be broken is if this high right here at 93.43 is clear to the upside. That would be a higher high and could indicate a trend reversal in the dollar. I'm not necessarily expecting that, but it's a level to watch. On the other hand, you can look here and see that we've been making, they call this a negatively divergent higher high. So you can see right here, the price of the dollar has been going up, but the momentum indicators, so using RSI here, has failed to make new highs. So they call that's kind of like a sign of slowing momentum. And, I don't think the dollar has much more upside here. Even if we get above 93.43, this 94.65 level is really key resistance. So I'd be really surprised if we get above 94.65. Anything is possible, but I'm not expecting that. So if that is true, that we're kind of at the peak for the dollar, then that would be bullish for metals, correct? Absolutely. 100%. Yep.
Definitely. Now, did you want to share with us maybe a chart of gold? Because it's interesting, and I'd like to get your perspective on this. As we're seeing silver fall about 2.5% today, gold hasn't done a lot today. It's up and then it's down and it's pretty much flat. So why do you think silver is really the one that's taking a beating?
Well, one is silver is just traditionally more volatile than gold. So that's a simple answer. But I also look at the gold to silver ratio, and that ratio has compressed really far, really fast. Back in March of last year, that ratio was up around 130, which has never been seen before, ever. And then it compressed all the way down to about 65 to 1. So silver had outperformed gold by a factor of 2. That's a really fast move on that ratio. So it's natural to see some kind of backing and filling or, back testing in that ratio. So it's reasonable to expect gold to not get hit quite as hard as silver. And then as far as the key levels in gold here, this yellow line right here is the 200-day moving average. We already talked about that being one of the biggest inputs to those institutional trading algorithms. And you can see that just here the other day. We came up, tested the 200-day and bounced right off of it and failed. However, you can make a strong case here that we're carving out a reversal pattern with this reverse head and shoulders pattern. So this would be like a left shoulder, this would be a head, and then this would be a right shoulder. So as long as we hold above this long-term uptrend line here that goes back 2 years, the technical damage really isn't that bad in gold, as long as we hold above this uptrend line. Now, if we do fail here at this uptrend line, the big support is down at 1675. That's the double bottom from earlier in this year, back in March. And you mentioned that reverse head and shoulders. What does that mean as for like a price target on the upside? Yeah, so I like to think of technical analysis as helping me to create if-then statements. So what you would do here is draw a neckline, and that would be roughly, let's call it 1880. And then you come down here at 1675. So let's call that a $200 difference. So if you break above the neckline, you can kind of flip it, and that would project a measured move about $200 from the breakout above that neckline. So that would bring you back towards the previous all-time high, around $2,089. And that's if that happens. So it's an if-then statement. If you break above that neckline, then there's a decent chance that you rally up towards the recent all-time high.
Now, moving to the mining stocks, if you'd like to maybe pull up a SILJ, that's the kind of the mining stock ETF where it has a whole lot of silver mining stocks in there. You mentioned how it seems like mining stocks right now are very undervalued. What are your thoughts on that right now?
Yeah, so I look at a lot of ratios, right, to see where we are. And I like to divide the whole precious metals complex into 6 subsectors. And one of those would be the junior silver mining stocks. And they're currently the most undervalued component of the whole sector on a ratio basis. So you can measure SILJ versus silver itself versus GDX versus gold. And SILJ comes out as being the most undervalued right now. And when you look up here at the RSI, that tells you how overbought or oversold something is. We're at extreme oversold levels here. The last time we were even close to this oversold was back in March of last year. And if you go back in time, you can count on 2 hands how many times we've even been this oversold. So as a general rule, whenever you're below 30 on the RSI, that indicates extremely oversold, and just above a key support level, that is a statistically likely chance or likely place for a price to bounce from. We deal in probabilities, right? So there's a very good probability that we bounce here and this 1263 level holds. But anything is possible over the short term.
That's very key because, as you mentioned, anything is possible. When we were talking about the possibility of silver falling to around 2375, if that were to happen, where would the mining stocks be?
Well, like I said, I think most of the downside has already happened in the mining stocks. If we fell down to 2375, obviously the miners aren't going to go up. But it's possible that we get a little bounce here and then they come back and retest the current lows, or maybe they fall just a little bit further. I think that's much more likely than seeing another big waterfall decline in the miners. That's my baseline expectation.
You mentioned how silver mining stocks seem to be the most undervalued right now. What about the gold mining stocks?
So junior gold miners are more undervalued than the senior mining counterparts, but nonetheless, gold miners, as measured by GDX, is undervalued relative to gold itself. So if you're looking for value in the sector, you're going to find it in the mining stocks, and more specifically, the more speculative, mining stocks, the junior names. Now, those don't fit everyone's risk tolerance and objectives. I'm not saying that everyone should go out and buy those, but if you're just looking on what's the most undervalued, it would be the junior silver miners and then the junior gold miners.
Definitely. And one of the things I did want to focus on as well is kind of the big picture again. And as we see this pullback in the metals, how do you think this impacts the big picture for silver, if at all?
I don't think it does at all. So I like to say fundamentals tell me what to buy, technicals tell me when to buy. And when you look at the major macro fundamental outlook here, it couldn't possibly be more bullish for the metals. Going back 6,000 years, this is what the metals do. They do a full accounting for the expansion of debt-based fiat currency, and never in all of history has that happened on a grander scale than we're seeing right here, right now. I use the charts to help identify more precision entry and exit points and to craft a long-term exit strategy, but the long-term fundamentals really haven't changed. Now, if we lose some of these major support levels like 1675 in gold, $22 in silver, again, these are unlikely in my opinion, but if that were to happen, what that would signal to me is that this is just going to take a little bit longer to play out than originally thought, but it wouldn't invalidate the overall thesis.
And you mentioned earlier in the interview, kind of at the beginning, and once again, for our viewers just joining right now, we're with Steve Penny from the Silver Chartist, and we're reporting on, the market sell-off we're seeing in the precious metals and also the stock market today. Now, with respect to silver, you mentioned at the beginning how, the fundamentals couldn't be better for silver, but we are seeing this drop, and it's explained. It seems like, and I know your view on this, there's a bit of manipulation in the markets. And if our viewers are interested in learning kind of all perspectives of this manipulation debate, there's a link in the description. But your perspective on this, because we had one viewer comment on, the dollar, why can the dollar be going up if we're seeing so much inflation right now? And it seems like there's just, things are somewhat backwards in some people's minds.
Yes. So you raise a key point about inflation versus deflation. And what I've observed in my 15 years or so of studying these markets is that very often, very smart analysts have 2 opposing viewpoints, and they're both correct, but in differing timeframes. So that, there's a big debate right now. We're going to see inflation or deflation. And it's very possible that we see a short-term deflation, which we could be seeing right now, in the context of a longer term trend towards inflation. I can't imagine that we're not going to see much higher inflation over the years ahead, but it's very possible that we see some deflationary impulse along the way. And I'll also mention, this is just kind of a minor sticking point, but deflation is when prices fall. Disinflation is where kind of the rate of change, the rate of inflation decreases. And, I could certainly see that for a period of, a short-term period. We'll call it a period of months or so. And that could coincide with some grinding sideways or even weakness in commodities and the metals.
That's very interesting. So this transitory inflation is actually a possibility in your mind.
I mean, that's kind of a buzzword where if you say, yeah, I think inflation is transitory, like I'm on the side of Jay Powell or something. No, that's not the case at all. I think the longer term trend is towards inflation for sure, but I'm open to the possibility that we see a deflationary impulse that is relatively short-lived.
Definitely. And I guess when it gets again to the big picture and we kind of look into the fundamentals of silver, I know we've talked about this many times on the show, but did you want to share with the viewers, again, for our new viewers and those who might just be getting into investing in silver, why you are so bullish right now on the silver market?
Well, there's so many reasons. Number one, supply demand fundamentals, right? It's one of the few markets where you can find actual real value. I mean, the price is now less than half of where it was in 1980, 40 years ago. That's the only commodity on the planet that you can say that about. Industrial demand is growing, especially with this green revolution. Silver is the best conductor of electricity. It's used in solar panels, all kinds of electrical applications. And then investor demand is continuing to rise. I don't see this Wall Street silver movement and the general populace. I think the trend is towards them waking up to the prospects of owning physical silver. So that's one. And then we talked about monetary history. Silver always tends to benefit in an inflationary environment where they're just continually debasing the currency. And I don't think anyone sees that trend abating anytime soon. So those are just some of the reasons why I'm so bullish on silver.
And kind of your upward price targets then for silver long-term.
Longer term, well, let me start with the intermediate term. The first key resistance level is $30. Everyone knows about that. Getting through 30, I think, paves the way for a fairly quick run towards the previous all-time high near 50. And I say pretty quick, it could take a few months, a few quarters. But, I think 50 is a good intermediate term price target. And then beyond that, when you go out, 5 years or so, it may sound ridiculous, but historical precedent, just the average of the previous two bull markets, gives you a silver price somewhere near $300. And that may seem crazy right now, but that's just what the historical data tells us. This isn't me just pulling a number out of out of my back pocket.
I think that's so key because, obviously our viewers have to make up their own decision, how to invest their money and everything like that. We can't give any financial advice, but as we see this price action, like this daily price action, it's important not to get too hung up on that and kind of look at the big picture and where we are. So kind of your perspective on the strategy that people should have when investing.
Yeah, I think I like to say this a lot, more important than predicting the next short-term move is having a strategy to deal with a variety of different outcomes. And there's no right strategy for everyone. So here's 4 key ones that we just talked about in our report last weekend. Number one, you could simply do nothing and wait for a technical reversal. There's nothing wrong with that. Some of the smartest, wealthiest investors in the world, they wait for things to reverse. So that's one option. Number 2, you could just dollar cost average. That's what I personally do every month with physical metal. I buy just a little bit every month, no matter what the price is. So that's another approach. Another approach that I take with my longer term mining stock portfolio is just to scale in on weakness, keeping some cash available and not necessarily trying to nail the bottom, but buying a little bit every time there's a really sharp sell-off. And that can make sense for some people. And then, like I said, you can simply just do nothing. Maybe you've got no cash available. As long as you still believe in the long-term fundamental thesis of this sector, there's nothing wrong with just turning your screen off for a couple months and don't even look at it, as long as you still hold that fundamental conviction. And then position sizing is something to think about too. A lot of people, I feel like in our community, put their whole life savings into these sectors. I'm not going to say that's right or wrong, but these are things to think about. How much do I want to risk in this sector? So hopefully those thoughts helped.
Before we let you go, did you want to share with the viewers any last thoughts you had and where people can find you? And also if they'd like to support our channel by subscribing to our newsletter, or your newsletter, I should say, there's actually a specific link for that to do that. So if you'd like to share that with our viewers.
Yeah, awesome. Yeah, I guess as far as closing thoughts, if you don't have a strategy, think about one. Think about one that suits your risk tolerances and objectives and your personality type. How do you want to handle a variety of different outcomes? Position sizing, and then think about a long-term exit strategy. I think those are the big things that easily get overlooked by investors in our sector. And then, yeah, you mentioned the newsletter. We do a free weekly letter. It goes out every Sunday afternoon. The goal there is to provide a ton of value for free. There also is a very low ticket premium option where you get an over the shoulder look at exactly what I own, what I'm doing, and why I'm doing it. And like you said, we put a link just for your listeners, and I believe it's silverchartistliberty.com if you want to check that out.
Fantastic. Well, yeah, definitely silverchartistliberty.com. Thank you, Steve Penny, for joining us today, and God bless.
You bet. Thank you so much, Elijah.